Let's move on to the Nigerian equities market space. The all-share index down 0.09% yesterday to close at 39,011.31. And let's talk about the fixed income market. We saw a central bank conducting another OMO auction yesterday. That's the second in the week. Now, for more on the outcome of that and more updates on the money market, I am now joined by Kingsley Okereke, his fixed income dealer at Diamond Bank. Kingsley, it's great to have you on the show. Now, as I mentioned there, another auction yesterday, being the second this week, we saw 40 billion naira offered across 2 maturities. So first of all, tell us what happened there. We hear that, the stop rates didn't change. So why did that happen?
Yeah, good morning, Didi. Thanks for having me. Basically, the stop rates didn't change because CBN is trying to switch to the shorter tenors. They're trying to manage their costs because looking at longer-term maturities, they will have to inch up the yield on that. So they just decided to leave it around the shorter end of the market. Basically, about 50 billion was offered, but about 68 billion was sold, still at 11.55 and 11.65 levels for the second successive auction. So basically, they're just trying to manage their costs and also the aggressiveness of players to also shore up their yields in that respect, made them just leave it same for the second successive day.
Now, tell us what happens in the T-bill space, because I heard that the effects on that space was pretty mild.
Yeah, it's pretty mild. It's pretty mild because basically, players have this reinvestment risk that they are facing right about now. We have a lot of bills maturing. For today, we have about 131 billion maturing, and besides that, we have about 1.1 trillion bills maturing in that space. So we expect more successive OMOs to be coming out, and in that space, we don't see much changing. The shorter end of the curve will continue being high. So players are just trying to take advantage of the market. And so the effect of that, usually because of the OMO sessions, it causes a bit of distortion to the market. So we don't really see players go to the auction to fulfill whatever demand they have. So whatever secondary market really has to offer is just repriced to that same level. So you don't see much changes happening there. That's why it's the way it is.
So where do you expect to see the focus in today's session? Do you expect to see it in the short-term bills?
Well, I think the CBN will have to move a little bit longer because, as I said, we have a 1.1 trillion maturing in this current month that we're moving into. Also, for today, we also have 131 billion maturing. So, and also within the week, we also had about excess crude and short P allocations credited to the system. So the market will be really elevated. So they will need to move to the longer end a bit, or mid-tenor, just to satisfy demand and also try to mop up as much liquidity as they can.
Now, let's talk about, the bond market. We saw another bearish trading session yesterday. Yields up an average 0.03%. Where was the selling focus in the bond market?
Basically, the selling focus on the bond market was on the most liquid bonds. That was the 5 years, the 7 years, and the 10 years. That's 2022, 2017, and 2019. Basically, that's where the concentration was. And for the bond market, it's going to be bearish. It's really going to be bearish because despite the fact that we have about 28 November maturity of 200 billion today, I don't see that driving yields lower. I see that driving yields much higher because just recently, the FOMC has indicated that they are likely going to taper in coming meetings. So that market has begun to start repricing the tapering effect into bond yields. So that's why you see them soaring up. And besides that, comparatively, before now, we saw that Treasury bill yields, effective yields, were even doing much better than what the bonds had to offer. So it was just normal for the bonds to try to recorrect to address that slight gap. But going forward, I see yields going up further. Besides that, we also are moving into 2014. We have inflation forecast. In my perspective, is going to inch up because what we've been seeing is the harvest effect, which has been able to subdue inflation. So we are likely to see inflation inching up. Also, we also see a lot of fiscal expenditure going on because government will try to meet up all the electoral promises going into 2015, which is the election year. So we gradually see the tapering effect and excess money supply increasing usually will likely affect yields. So we expect that yields will, going forward will gradually continue to increase.
Now, you mentioned inflation there. Quite surprising what you said, because most people actually, expect that it's not going to go up that much. I mean, I know that there's a band of 6 to 9%. So when you say that you expect to see inflation inch up, what level are you talking about?
Well, when I say I see inflation inching up, I'm looking at a short-term basis from now to not for this year particularly, but I'm looking at first quarter next year. So that will affect whatever premium you place on the price now. Because if I have to enter into a bond, I have to be able to see my way through the bond, and I have to look at short-term stability of that in that respect. So short-term stability, yes, might be mildly okay, but based on the internal and external shocks that we foresee, you just see a bit of a nudge in inflation upwards. It might not be so subdued as we might see it.
Kingsley, very, very quickly, just give us your take on the Naira. I mean, we've seen the Naira continue to weaken this week. So what's the outlook going forward, very quickly?
Yeah, the outlook going forward Naira will be very stable. We've seen it about 158 levels. Yesterday it closed at 158.95. We've seen a bit of selling interest from the oil majors. That has helped to moderate it. Not much demand coming through. We're going for the fact that we are going into the end of the year, so people are winding down activities. So I don't see any much change to the Naira. So the Naira should remain stable at current levels.
Okay, Kingsley, let's leave it there. Thanks for sharing your view with us. That's Kingsley Okereke. He's a fixed income dealer at Diamond Bank.